Good day, people. This is Uptown Accounting Group, Lamar Jones, back at you with a financial statement overview for the New York Knicks. Now, the New York Knicks, shout out to them, playoffs time, NBA, all of that's going on. But keep in mind, they're owned by Madison Square Garden. And the New York Knicks is one of the only teams, matter of fact, they are the only team to release financial statements, and they release them through Madison Square Garden. So, with no further delay, let's jump into Madison Square Garden. So, you can go to Google, you could put in Madison Square Garden Investor Relations. I already have it in there. Wow. And Madison Square Garden, you can go there and you can find their financial statements. Keep in mind, financial statements consist of three things: income statement, balance sheet, statement of cash flows. Here I clicked on their financial quarterly results. These are the quarterly results. We're looking for the most recent, which would be Q2 2026. And so this is their most recent financials. We're going to look at the 10Q. The 10Q is just a report that goes to the SEC, and it's their quarterly financial statements. Those three things we talked about: income statement, balance sheet, statement of cash flows. So this is their 10Q. As you can see, the SEC, Securities and Exchange Commission. My computer's moving slow. There we go. Let's kick into it. And so, table of contents, basically 34 pages, so not too long. We definitely won't be going through reading 34 pages, but we will start here with the balance sheet. And so, we said financial statements have three items, and this is one of them, the balance sheet. So, and keep in mind, this is Madison Square Garden. They have current assets is the first item within the asset line. And just to go over assets are things that you use to make money. Uh, don't quote me on that. That's just a, off the cuff definition. But total assets, and these are in thousands. And so this number here, long story short, is 157 like million. And so keep that in mind. This is how things kind of work. But total assets here, 1.8 billion. This is their total asset line. So let's just talk about that real quick. Um, when you go into this 1.8 billion here, that's their total assets. And they have it broken into two different positions: non-current assets and current assets. Current assets are anything that you expect to use within the first year, so 12 months. And then current non-current assets are more longer items. And so out of this 1.8 billion, we could see most we'll deal with the current assets first. Out of this 1.8 billion, only 420 um, million come by way of the current assets. The rest are long-term assets. And so with that being said, our current assets are 420 here. Most of that is cash, 158 million worth of cash on deck. Accounts receivable. So this is money that's coming in that they're owed, but they haven't been paid yet. Basically 120 million, 38 million for related parties. And so, but most of this, we really just talk about the cash and the accounts receivable. So these are their biggest current assets. And then they have prepaid expenses, which basically things that they paid for and that they haven't been given a service for. And so they're owed services. And so this is considered a current asset. But for here, I think the cash is something of note and accounts receivable. And so that makes up 420 million of that 1.8 billion. So as you can see, that's um, it's not a lot of it, and so that still leaves almost 1.4 billion worth of money. And so with that 1.4 billion, let's dive into it. When you're dealing with Madison Square Garden, their biggest asset is property and equipment, real estate. This is their biggest asset here. And so this 607 million is basically a big portion of their assets. Then after that, right of use. And so renting out Madison Square Garden, just having the ability to do so is almost another half a billion. So you add that up, that's $1 billion of their asset line. So it really is big on real estate, which we all know. Madison Square Garden has a rich history, not just basketball, boxing, so you can check that out. So total assets 1.8 billion. Excuse me. All right, and so now that's assets. Remember, assets anything you use to make money. So in this quick example, they got cash, they have accounts receivable, people owe them money, and they have their real estate. Those are their assets. There's some other things, but that's all we're talking about. Now we're going to go into the liabilities. Now the liabilities are 1.787 billion, and so almost 1.8 billion. So they have a lot of liabilities as well. Similar to assets, is broken up into current and non-current, and we're going to deal with the current first. And so out of the 1.7 billion, 618 million is the non-current liabilities. And liabilities are basically amounts that you owe. And we'll talk more about those liabilities. And so out of this 618, their biggest liability is accounts payable and other current liabilities. So these are bills that they owe for whatever reason. It could be for a contract, it could be for a specific service, whatever the case may be. And so they owe $228 billion in liabilities. $1 million. Sorry about that. Wow, $228 million in liabilities. Related party payables, and so these are people that, or these are related parties rather, that they owe money to, and so this could be another league. This could be another company within um, their space. And so Madison Square Garden own a lot of companies, or have affiliations with other companies. And so that's what this would denote. So another 69 million for that. And so remember, current liabilities is 618 million. We've spoken about roughly 300 million of those. We're going to go into the other 300 million, which is deferred revenue. This is basically people paying Madison Square Garden for services to rent and things like that, but they haven't rented or been given the service yet. And so these are services that Madison Square Garden still owes, and so that's why it's a liability um, of 250 million. And so we see a lot of their current liabilities is just services that they owe in the future. Somebody may have made early payments to rent out a venue, things like that, and so that's considered a liability. And so a lot of time people hear liabilities and think bad. Not necessarily. And this just shows that they're being paid for services early, and so that doesn't necessarily mean a bad thing. And so that's 600 million of those. And then the next item is the non-current. And as far as the non-current goes, um, the biggest item, well, both of these items are pretty big at a half of billion, so 500 million in the long-term debt. And so they do own buildings and they take out loans for those. And so they have a big liability for that. And so when you see those assets, you do know that they have loans for those purchases and acquisitions. And a lot of that is within this half a billion we see here, labeled 554 million to be exact. And so the next item is operating lease liabilities, and so just operating certain leases, and so they also may rent things out or acquire things. And they have leases for those, and so That's another half a billion. So a lot of it's real estate related, and they go deeper in detail and like the notes. Up here, I'm just covering basic numbers for the financial statement flow. And then the last thing is equity. You can get to equity real easy. Assets, which is 1.823 here, minus liabilities, which is 1.7 here, and you'll be able to get to the total equity, which is an equity of 36 million. And so, but here you can also see the details of the equity. As you can see, it's stock. So people that purchase stock in this public company, um, that's classified in their equity. Their retained earnings, these are all of the earnings throughout the years. As you can see, 224 million that they've retained, that's still within their equity. And then the all of these, and there's a lot of other things going on here, other comprehensive loss. So I'm not going to cover those, but um, in other videos, I do dive real deep into the balance sheet, and so you can catch those. But um, this is their equity line. Mainly, you can look at it for big stock purchases and also just retained earnings. And when you're dealing with public companies, that's pretty traditional. So moving on. Um, the statement of operations, which is the income statement. And so it goes by different names. Some people call it profit and loss. Some people call it statement of operations. Some people call it income statement, but it's all the same thing. And it's measuring your revenue minus your expenses to get your net income. So right away, we're going to go into the revenue. People like the income statement a lot, much easier flow. So revenue, and then keep in mind, this is for the 3 months ending 2025. Wait a minute. Hold on. Wait 1 second. All right. All right. We are back. I had to check something out. We good to go. All right. And so going back to the income statement. No, that went too far down. All right. And there's a lot of little statement of operations. And so when I say it's a lot, basically they drill into it from different levels of detail. And so you'll see multiple in here. But this is where we left off at. All right. And so 3 months ended December 31st. And so this is technically from October to December 31st, 2025. So keep that in mind for this revenue. And with that being said, revenue from entertainment offerings 360 million. And so, and this number is in thousands, so that's why it's 360 million. And basically that's from entertainment. And so people they rent it out, or they may just host a basketball game, such as the New York Knicks. So 360 million from entertainment offerings. Food and beverages, another 64 million, and then arena licensing fees, another 35 million. And so you add that up, total revenues of let's call it 460 million in that 3 month time period. Um, and then they have other expenses after that. Those expenses, you could take a look at those, the entertainment offerings, and so licensing fees, um, food and beverage, total direct operating expenses. When you add those items up, their total expenses, they don't have a total expense line here, but I can tell it's around 300 like call it 50 million all together. Oh, dang, Madison Square Garden, what y'all got going on? Let me check you out again. Total revenue, we talked about it. Entertainment expenses, total direct operating expenses. Okay, okay. Let's see what's going on here. See, they put a lot of numbers in here, and so I, for presentation purposes, I do this stuff just live off the back, but I want to show you the exact numbers, and sometimes not as easy as I want it to be. And so their total direct expenses 212. Let's talk about this number. This 212 million. And so that was a summation of the entertainment and the food and beverage. And so that's what gets the total 212 million. And that's really expenses that's used to host these events. And so if you have a fight, if you have a Knicks game, you have to hire people, you have to buy things, you have utilities, you have all of that. And so well, utilities may not be in here. I don't know. It depends on their accounting, but you do have those items. So keep that in mind. That's what makes it the 212. Then they have selling, general, and administrative expenses. Depending on their accounting, they have a footnote here in this A. I'm not going to go through but you could read and see how exactly they're categorized. Every company does it different, but basically 68 million in those admin expenses. And so we got the 200 that come from entertainment offerings, licensing fees, things like that. And then we also get the food and beverage expenses that we discussed. And then we get the selling, general, and admin. All of that equals up to about, let's call it 278, 80 million. Long story short, I've already spent too much time on these expenses. You get the gist. Not really much going on here, but the biggest number that we could talk about here is this 93 million. And what that shows is the income, the total net income, 93 million. And so out of the total revenue of 460 million, they kept 92 million. And so a lot of it did go to expenses, but they still kept a good chunk of cash, a good chunk of income as well. And so, and these are more items to go deeper into. I'm already at my time, so I will be moving on. If I could get a quick statement of cash flows, I'll go over that. But if I passed it up, we'll be moving on. Receivables from contract. So yeah, it goes deeper into detail. But hey, I'm not saying it straight away, so I'm leaving straight away. With that being said, let me know if you want to hear about something else. A lot of companies, a lot of governments have financial statements. And we want to understand those financial statements. We want to understand what's going on. It's not just to the investors, and most of us are investors in some way, shape, or form. If not as a shareholder, as a stakeholder. And so you want to understand what's going on. And the financial statements is where the truth lies because accountability is absolute. With that being said, I did talk to your ear off. Uptown Accounting Group, Lamar Jones. Like, follow, subscribe, check me out. Deuces.